Now, Bitcoin and gold dramatically outperformed the S&P 500 on the Fed's QE Infinity news. This is what I want to talk about now. So this is coming from Long Hash. All right. So Monday morning, the Federal Reserve's Open Market Committee, funny, around the office, we typically call it the FOMO, right? It's the FOMC, right? But yeah, we call it the FOMO. Revealed its intent to purchase any number of securities, right? To help support the flow of credit to households and businesses. Okay. I want you guys to pay attention to this. What the Fed is saying is it's willing to purchase any value of securities, unlimited purchasing of debt, right? Because again, the Federal Reserve purchases securities, right? Financial securities, and in return gives cash, right? This is how money is injected into the monetary system. This is how the repo market works, right? Banks give securities when the system needs liquidity. Banks sell securities to the Federal Reserve, right? And promises to repurchase them back at a higher price. The Fed in turn gives them cash, allows them to take care of their liquidity crisis. Later on, they repurchase the security back for a higher price. Then there's the reverse repo, which is the exact opposite. The Federal Reserve gives securities in return for cash, and then gives the cash back and takes back security. This is how the Federal Reserve, following the 2008 financial crisis, has more directly affected the liquidity of dollars in circulation, right? With repo and reverse repo, right? There's a couple other things, but those are the big ones. Okay. All right. So they are willing to buy treasuries, mortgage-backed securities, of course, the collateralized debt obligations and all those things that crashed the market back in 2008, corporate debt, municipal or state debt to stabilize the economy, even if it means trillions of dollars worth of purchase. This is in addition to what the government wants to do. Now, moments after this was announced, everything rallied. Equities, gold, Bitcoin, crude oil, poof, pop, right? The investors seemingly comprehending the QE Infinity announcement, right? How only two assets have held their gains so far, and that is Bitcoin and gold sustained rallies. This article goes on to talk about being on the cusp of a split between two types of assets, those that will just continue to go down in value in the face of infinite cash, and those that were designed to be deflationary, Bitcoin and gold, right? Bitcoin and gold. All right, so we're going to get into Willy Woo's comments here. Where he says, seeking the decoupling, here's where we are in the timeline compared to the 2008 banking crisis, a decoupling of safe havens from equities, showing hints it may have begun, i.e. when Bitcoin and gold go bullish and stay bullish, right? We'll have more confirmation in a week. So there's a couple charts here. This is back in 2008, the financial crisis. Here we can see the S&P 500 is making a downturn, and gold, just as in now in 2020, gold and Bitcoin and everything else makes a flight for liquidity. So anything that's risk on is sold for cash because cash is king. So people get scared and people sell all of their assets and they sit in cash because they think that the end of the world is coming, right? Because they don't know what's coming. Fear leads to selling, right? Fear generates panic selling, right? So we can see this is back in 2008. This is the financial crisis. We can see that gold and the S&P 500 begin tumbling simultaneously. And then we can see the decoupling right here. This is toward the end of October. We can pull this up on the weekly chart, but this is toward the end of October 2008. I think it's actually October 27th was the weekly close. I studied this, and we can see that gold goes sideways for almost 2 months. Right? And then begins rallying, makes a higher low on the weekly. All right, this is the daily, but makes a higher low on the weekly, and then continues its charge and never goes down. And you can see what the S&P 500 does. It just starts to inversely move. Now, one very important thing to note when looking at this, it doesn't just happen overnight, right? Like gold just doesn't start, flying off to the races, right? It doesn't just start flying off, but it decouples, right? And the S&P 500 continues to decline, traditional markets continue to decline, and gold holds its value. So again, this is something very, very, very interesting to note, right? Even when earlier in this month, when I took a pretty good sized loss, right, trading, even when I did that, I still outperformed the market, right? I still outperformed the market by managing risk and trading multiple markets, right? And I have since traded that back up. So it's been an interesting month and just so critical to understand outperforming and holding your value in something that is relatively stable, right? And again, my portfolio, which is not even associated with my trading, is very representative. Again, foreign currencies, cryptocurrency, precious metals, my SH ETF, which I consider part of my portfolio right now, and even the individual stocks that I have selected have held their value better than the market standard than the S&P. And sometimes that's not bad trading, right? Obviously, there's so much opportunity to make money in these markets right now when they're going down. Don't feel bad about that. Be proud, be happy. Because listen, if you have to choose what side of the aisle that you want to be on, those who are on the wrong side, who aren't proactive, who are reactive, who don't understand, who aren't financially literate, and the side where we know what's up and we make money no matter what market we're trading in, I know 100% where I want to be. And I know exactly what side I am on. So a lot of people are going to feel bad for making money when people are suffering. And yes, it's certainly bad. And there's a lot of things that you can do personally to try to help out. Not the world. You can't solve the world, but you can certainly make things better in your local society, in your family, in your household. Focus on that first. Be a good person. Do the best that you can with what is sitting in front of you. Do that, right? But don't, you don't have to sacrifice here, right? Because everybody else is suffering. You don't have to do that, right? Do what's good for you, right? Again, something very critically to point out, right? We wander sideways here in gold for almost 2 months, right? And then we have a nice rally. We come back down. We test the highs here, as you can guys see right here. Let me get my. You can see here. We wander lazily around for about it's really a month, right? And we have this nice rally to the upside, and then we come down and we retest previous resistance as support, and it's off to the races. And again, you can see we test previous resistance as support right here, and it's off to the races. And we test previous resistance as support, and it's off to the races, right? And so the question here is, are we going to see the same thing in Bitcoin, right? So here we got the decoupling, this purple line right here. Here's the flight to liquidity. Everybody sells into cash, everything, stocks, gold, precious metal, toilet paper. I would tell you, people think people were hoarding toilet paper. More like stores were selling all their toilet paper. No, okay, maybe no, it's too soon. All right, sorry. And now look at where we are right here. Here is the kind of dotted line right here, and we can see Bitcoin and gold moving to the upside as the S&P continues to move down. So again, this is very early data. One thing that I want to make sure that people fully understand is that this is not some kind of Bitcoin's just going to go right off, just fly right off, and if you don't buy now, you're going to miss it. I don't think so. I think you've got plenty of time to buy at lower prices. But just again, something important to keep in mind. Let's clear these drawings and just kind of look at the rough trajectory of what gold did. Of course, Bitcoin's going to be far more volatile. But gold establishes itself in this nice range. And what do we see right here? I want to point that out. What do we see right there? We talked about this a lot. So for those who understand Wyckoff theory, you're going to know exactly what I'm talking about right here. In an accumulation period. All right, what do you see? So let's see where we're at right now, right? We establish a low. We come up and we're going to establish a high. Come back down. We form a higher low. We're going. And then what do we get? What is that called? It's called a spring. It's Wyckoff theory. And we come up. Sometimes we do this, and we jump the bridge at some point, right? There we go. Alex nailed it. Of course, Alex knew that. That is a spring. That is a Wyckoff spring as a part of accumulation and distribution. So be prepared, right? So when people say we can see 3K Bitcoin, 2K Bitcoin, yes, we can. Especially if we kind of play out this decoupling, gold, accumulation narrative, right? Because what needs to happen? You've got a lot of people that still want to sell Bitcoin. And if Bitcoin is going to be a safe haven asset, well, then there has to be an opportunity for accumulation, right? Which means, okay. And there's the spring, which panics everybody out, as smart money forces or incentivizes individuals to sell at the worst possible price, and then they take price to the upside, right? But it doesn't happen overnight, right? So again, don't think that, never just go all in on Bitcoin, average into your positions, average into your long-term positions, be prepared for price to go lower, and just have your wits about you, right? And Willy Woo, again, commenting on this, all assets that are liquid are quickly sold off for fiat, primarily for US dollars. And this led to Bitcoin seeing its second worst day ever, falling from 7,700 to the mid 4,000s. And what is happening right now, fear is starting to subside, and people are sitting in this cash, and they're like, oh man, I don't want to hold this cash, man. We got the Fed printing money. This stuff's not even going to be able to buy the toilet paper that I just bought 15 rolls of last week when money was worth more. Man, that's a lot of toilet paper. And so people want to do something with this money. People aren't stupid. They want to put the money in something that is going to hold value. So where are people going to run? Safe haven assets. Gold, silver, platinum, palladium, you can make an argument for, but definitely gold, definitely silver, definitely if you go to your financial advisor, they're going to say safe stocks, right? Stocks that are recession proof. There's no such thing. Stocks aren't recession proof. The Forex market's recession proof. And we're going to see if Bitcoin is recession proof because we're pretty darn sure that gold is. We got some good knowledge that gold is also recession, but we'll see. We shall see. What they say, every bull market is the same and every bear market is different, right? And every bear market is different, but markets go up and markets go down and won't just go down forever. In this case, according to Willy Woo, the assets most likely to outperform in this macro environment are gold and Bitcoin. That would explain the overperformance today and why gold surged while the stock market underperformed from 2009 into 2011. All right. And Robert Breedlove, that's a heck of a name. Robert Breedlove? Woo, man. That's your fun at parties. He is the founder and chief executive of Parallax Digital. Wonder if they got a hold of my Parallax indicator. He says that infinite cash in the Federal Reserve System means it will all eventually have zero value. Bitcoin was specifically designed as a countermeasure.